I'm Katie Perry back here again. I'm actually filling in for our moderator, Jacqueline Melinek. She is stuck in Paris, allegedly. No, we love Jacqueline and all the work she does, and her colleague Eleanor is here, so you have to say hi. I'm going to do my best Jacqueline impression for this amazing panel. So I will introduce our panelists. When I say your name, please hop on over. Maybe not hop, maybe just walk casually over to the stage. We have John Nahas, Chief Business Officer at Ava Labs. Fahmi Syed, President, Midnight Foundation. Nick Ducoff, Head of Institutional Growth at Solana. Raja Chakravorti, Chief Business Officer at Stellar Development Foundation. And of course, Damien Ekechukwu, Director of Ecosystem and Product Partnerships right here at zerohash.
Switching mics now. This one, everyone can hear me in the back? Okay, great. Hello, everybody. Hi. Everyone's wearing blue except you. I don't know. Well, you got blue jeans on.
Yeah, everyone's a little blue.
All right. Hope you guys are ready to bring the fire for this panel. We're getting to that point of the day where everyone's about 4 coffees deep and ready to get into it with each other. So let's talk about it. Let's talk about the historical narrative in this space being dominated by a single blockchain winning the entire market. But today we're looking at a completely different landscape. Obviously, we're living in a multi-chain world, and that is the idea of this session here today. Talk about how these ecosystems all work together, what each of you is building, and how the industry is sort of moving beyond this one chain must-win debate. So I'm going to start with a primary question for all of the panelists. I'll start with Damien, since he's so far away from me. Damien, a few years ago, there was an intense debate about which blockchain ecosystem would ultimately dominate. Have we fully moved beyond that thinking as an industry?
I would say we're very far away from that thinking. What we're seeing in the market today is, I think, an increasingly high specialization across different ecosystems. I think the conversation has certainly evolved from who's the fastest blockchain, who's the most performant blockchain, who's got the highest token price, to who's got things like real distribution. I think Edward mentioned that 3 years ago, Base wasn't even a thing, and you've seen them really scale and bring TVL online because of that front end, that app they have in the Coinbase app. My good friend Raja over here at Stellar has done an incredibly good work in terms of like the partnerships that he's been able to build in order to help institutions come on chain. So I think the differentiators are starting to look a lot different, and no one again can hide behind the chart on CoinMarketCap or the block times and things that end consumers might not necessarily be concerned with at the end of the day. And at zerohash, I think what we're seeing is the ability to package that into a solution that matches our customers' use cases, right? So bringing tokens online to brokerages like public.com or interactive brokers and giving end customers exposure to different crypto assets, or offering different regions, different end users the ability to fund accounts with stable coins without necessarily having to bridge from a DEX, swap, or sell into fiat to trade on call sheet or do other things like that.
Yeah. And Raja, I swear I'm not going to go in order the whole time, but I feel like I need to go over here a little bit. But we recently saw major milestones like the DTCC announcement. It felt like a massive nod toward institutional network adoption. From where you sit, how does that kind of institutional momentum change the conversation around network adoption and multi-chain reality? What does that look like for you and your team?
I think it changes it tremendously. I mean, the reality is when you look at the post-trade infrastructure for all of financial services, DTCC is the backbone for that. I'm going to do a commercial for my friend who was here on the panel before, but I think the
Which friend, for those of us?
From DTCC.
Okay.
They custody over $100 trillion of assets. They settle over $4 quadrillion of securities transactions on an annual basis. Like, the fact that DTCC is now moving to have a tokenization service is dramatic, because the trust that they are assembling across institutions globally, that is transformational. It is changing changing the paradigm for what institutions believe can be true. I think it brings validation to this idea that, hey, look, the regulatory clarity is clear enough that someone like DTCC can make this move, and it's starting to then bring in a lot of these institutions who have been sitting on the sidelines saying, okay, I can maybe do like a pilot thing here or there to, oh, we can actually try to take advantage of these improvements, the settlement timelines dropping from T+2 to T+0, the efficiency, the cost, all of those things. And so I think that's really valuable. On the interoperability standpoint, though, like I truly believe in an interoperable world. I think the question is really about where is your strength. So if you think about like an Ethereum ecosystem, for example, it has had just a tremendous depth of DeFi liquidity. Fantastic. My friend in Solana, like we were talking a little earlier, what they've done from a consumer perspective is really like it's a masterclass in terms of like how you develop that engagement. And I think the question is like, what are you picking and choosing to do? And I kind of think of like the Bill and Ted's Excellent Adventure quote where it's like, be excellent to each other. Like just be excellent at the thing that you do. And so our view at Stellar is that we can really be a canonical chain for institutional adoption because we really try to focus on things that institutions care about, like, you know, fast settlement, you know, really cheap transactions, but also having institutional capabilities like asset freeze controls, the ability to claw back, and other sorts of things that are really critical for a financial institution.
Well, let's mix it up. We'll skip over to John. I like the point about be excellent at what you do.
Yeah.
Okay. For Ava Labs, how would you define that for you guys? What are you guys most excellent at?
So I think, you know, taking a step back, you know, and hearing the great work that the people up here have been doing, I think we're kind of at the end of the beginning of the first kind of generation business plan of blockchains, right? General purpose blockchains existed, and we're trying to find their use case and their users and everything else. And yes, you're seeing people like the DTCC come onto Stellar, and other people launch things on public chains, but they're going to effectively launch on a lot of chains because that's their distribution. But ultimately, for the next stage of this world that we're actually seeing now, that's regulated, that's compliant, that's specific, you're going to see businesses build their chains. They're going to want their own environment. So what we do at Avalanche is give anybody the opportunity to build the chain for their business, not fit your application or your asset onto our infrastructure. Build an infrastructure that enables your business, whether it be payments, equities, securities, loyalty and rewards, and everything in between. Because jurisdictionally, there's differences in compliance. There's, you know, asset restrictions. So we're working with Denari, who has you know, worked with FINRA and the SEC. They have their own brokerage, kind of like the Onchain DTCC. They have their own blockchain on Avalanche. FIFA, 20% of the World Cup tickets that people are buying and selling and reselling are NFTs actually on a FIFA Layer 1 blockchain. TIS and Denson in Japan, or Konami, or Mirai Asset in Korea, all these different people want their own environment, right? So whether it's DTCC or the New York Stock Exchange, or NASDAQ or everybody else, they're not going to want to compete on the same block space if eventually, in the long term, maybe in the short term, to dip their toes in. But what we do is we give compliant rails to people to build the blockchain for their own business, whether it's payments, loyalty and rewards, equities, or anything else.
All right, let's stick on compliance for a second. We love compliance at Zero Hash, obviously. Nick, as institutions transition from pilot programs to these live deployments, how does Solana's high throughput architecture handle the strict compliance and permissioning guardrails that are required from these large firms, a lot of which are in the room with us today?
Sure. So I think first I would just want to share kind of the vision for Solana, which is this idea of internet capital markets, which is, you know, quite different from the one that John just described at Avalanche. It's the idea of connecting all internet users, of which there's 5.5–6 billion, together with all assets on Earth in a single liquidity venue. That's kind of the vision that we have with internet capital markets. And the way that we accomplish that with both retail users and institutions from a legal risk and compliance perspective is there's a kind of a choose your own adventure. You can either, you know, kind of get the best of the public ledger and have your permissioning at the token level. And then at the token level, you can control what applications that token can be used in and what wallets that token can be held in. And that covers, you know, I would say the vast majority of LRC use cases. If you want additional permissioning, you can have what we call private zones, where essentially it's an escrow where you can have your own environment that then has liquidity back to Solana mainnet. So you can still do a delivery versus payment against the $15 to $17 billion of stablecoins that's currently on Solana. And then if you want the kind of the most permissioning, you can run essentially a fork of Solana. That's called Solana Permission Environment. For example, Citi did a trade finance pilot on a Solana permission environment. And so if you want to kind of control end-to-end the entire experience, like having your own blockchain, that's something you can still do on Solana. So we really see kind of a world where you can do pretty much whatever you want at any layer, all within the Solana technology, while still maintaining the vision of internet capital markets.
All right, Fahmi, you had the roughest. You're the last person to go. There's been like 3 questions. So I'm going to give you the floor to answer anything you might have been wanting to talk about in the last 5 minutes, and then I have a question for you. But anything you want to share about, what you guys are all about, give us a little overview there, and then at whatever point of that you want to jump in on, it's all yours as the 6th man.
That's
or the
quite
5th
dangerous.
man.
If I had free choice, I'd talk about the Football World Cup. But we're here to talk about blockchains and interoperability. So Midnight, first of all, thank you to Ed and the Zero Hash team for having us here and being able to speak. Midnight is the newest of the chains here. We are an L1 that puts privacy and sort of compliance, selective disclosures at the heart of what we do. I come from a financial background. I spent 20 plus years in the hedge fund world. None of the large hedge funds are going to trade on a public blockchain because it's not what you hold and who you are. Anonymity is not privacy. Anonymity, AI bots will figure out who you are. If you're a large custodian, they will figure out what your revenue streams are because they'll identify which wallets belong to your clients, what your revenues are doing, and then analysts will get involved. They start shorting your stock or buying stock. So we believe privacy has to be a fundamental premise of your core infrastructure. We don't think we provide everything to everyone, but we believe we can extend our privacy to every network. We talk about interoperability and using lots of different chains. I agree there's no one chain that wins, but many of the chains that came around through, I guess, the 3rd generation, the scalability generation, most of the tokenomics is tribalist. You have to go and own an asset to go and transact on that network. So that means selling your native asset to go and own the foreign asset to go and transact. If you're a CFO of a large corporation or financial institution, how do you predict the cost of that transaction? How do you predict the capacity within the network? And then how do you retain privacy? So at Midnight, we think about privacy at a metadata level and as well as a transactional level, protecting who you are, what you are, and what you do, and making the tokenomics much simpler so you can have price predictability, capacity predictability. And we're happy to work with all of the partners here, all the people here, and beyond, because we think that privacy can extend out of Midnight into other networks.
It's nice to see everyone working together and getting along. I want to stay on the privacy point for a second, because this is something Damien and I have talked a lot about. It's very top of mind for us at Zero Hash, and my understanding is there's lots of different approaches to how this should work and how it works at each of your respective ecosystems. So I'll start over on the Stellar side with Raja. How do you all specifically view this sort of privacy, I don't want to say conundrum, but the challenge that Fahmi's laid out here? How would you articulate that to our audience?
Yeah. I just want to make one comment on this idea that it's great to see us get along. I think there is a shared ethos. I think if we're all blockchains, and ultimately the goal is to redefine what financial systems and the operating model for that should be. And so I think it might be narrow to think about us as being, we're going to compete in different things, but ultimately that's not the competitive environment we're thinking about. I'm thinking about how do you eliminate the correspondent banking system because of all of the inefficiency that is in there? How do we start to create a structure that redefines how capital markets flows? And I think that is a problem set where the TAM is astronomical relative to this very, very small thing that we are all doing right now. So I would just say the shared ethos in there is maybe partially something that we should rally around because it'll help us. Now, let's talk about privacy for a second. So I think we're really excited about the work that you guys are doing at Midnight. Ultimately, we think about privacy as being something we want to apply in a composable layer. And so what we've really built are privacy primitives that are able to be composed depending on the use case. In the discussions that we have with financial institutions, payments companies, remittance providers, cross-border payments, privacy means slightly different things depending on who you're talking to. Why are we talking about like sender or receiver obfuscation? Are we talking about transaction balance? Are we talking about a composition of all of these things? Those things matter in that how you put those things together is really important. But the ability to have auditability, I think, is actually also critically important as well. And so how do you combine auditability with privacy in the best layer? And that's what we talk about when we talk about composable privacy. And so we're trying to allow that to be enabled alongside some of these other really important factors, which I started to hit on earlier in the DTCC conversation, which is if you are an institution and you want to be able to issue an asset, knowing that once it's on the blockchain, if that asset, if grandmother's house gets in the hands of a North Korean hacker, for example, does the North Korean hacker own it? No, you want to be able to freeze and claw back that asset. So having those controls actually is really critical. And so being able to apply controls with privacy, with the connectivity of a public chain, which allows for applications at a global scale to build on it, those I think are the elements that allow for success. And in that mode, that's where you start talking about like, hey, we can actually operate together by putting together the pieces that create the best possible solution. Now, of course, there's a UX component that we have to solve, but that's kind of the next level challenge.
Yeah. John, I want to switch back over to you. I'm trying not to go in order. It's really hard not to go in order. It's so easy to. But I know you guys have a slightly different approach. Tell us a little bit about how you think about these challenges that Ava
Look,
has.
absolutely. I mean, Raja quoted our good friend Austin Campbell about grandma's house falling into North Korea's hands. You got to think about it. And look, I think you have to take a step back again. Right? Like if you look at what historically has been with Ethereum, it's like an inverted pyramid, right? You have the base layer and then layers on top. These two gentlemen represent kind of the big pipe, everything goes through it, and you can shield things on the token side. We look at the way we do things as kind of an infinite lane highway. But in the same sense, like when you talk about compliance and about privacy, what's more private than having your own chain? And having your own chain that can connect to other chains, and you can execute on your own chain, right? So we're doing a lot of this already where regulated entities, particularly in Asia, have their own chain. They pull liquidity from our main chain, so you don't have to go to Circle and Tether and everybody else to get integrations. All the integrations come with the chain. But if an auditor comes to them, they can provide a private explorer and say, here you go, it's anonymized, but it's available, it's auditable, it's traceable. If you want to pass an audit, what's easier than just giving an explorer and saying, here's my entire end-to-end history of all transactions, rather than here's the entire history of transactions of the entire blockchain, but you have to parse out the token contracts. Like, this industry talks too much about the tech first, rather than the solutions. And I think for us, you can have private chains with permission validators. So you can pick who validates your chain and who uses it. You can have permission validators, but a public chain, which is like what FIFA has, right? You pick who runs your chain, anyone can use it, or public permissionless in the traditional crypto ethos. And I think for a lot of the people we work with on the privacy side, we see them start. And a lot of the people that we all talk to on a daily basis start on the private permission side, and then work their way a little bit slowly but surely along the way to public permissionless. I think the thought of this industry first was public permissionless, we're going to revolutionize the world, and that's not the way, money has governments that have armies, and you're not going to do this from the outside in. So we used to think that we would push it. I will say the public permissionless stuff, though, does inspire the private permission. The innovation that happens in crypto markets does force the hand of the incumbents to move on. Right? If it wasn't for DeFi, you wouldn't see people deploying on-chain. If it wasn't for stablecoins, if it wasn't for customer demand, right? BlackRock would have not launched BUIDL, right? Like these people are responding to the needs of their customers, but you have to provide solutions along the entire way. And on privacy, for us, it's, we have an encrypted standard on the token side. Like this is going to be a commodity at the end of the day, as is block space. So for us, think of it this way. I see people in this room that are my age or a little bit older, so you'll understand this analogy. The first generation was like AOL. You logged onto one site and everything that you wanted to do was on that one site. We are in the age, I think, and what we work on is like being the WordPress. Every bank is going to have their own blockchain. Every institution is going to have their own blockchain, just like they all have their own websites, right? So we're bringing the world from online on-chain.
It's interesting to think about what comes after WordPress. Have you thought about the next?
I think that's APIs, right? I think it's agentic, and I think ultimately computers want to talk to computers, and I think making your blockchain, whichever blockchain represented here that you choose, making it easily accessible to be built upon and connected to. I think that's really where the future is.
Yeah. And Damien, you're Switzerland in all of this. I know no one's fighting, but it is the World Cup. Tell us a little bit about, you talk to so many different institutional partners and also all of these guys and many more. How do you think about this topic as it pertains to, I love the point about solving problems versus just applying a tech. What's your philosophy when you're navigating those conversations with our customers and others you're talking to in the industry?
Yeah, I mean, I think everything you hit on with privacy, like not much to add. We think about it as like programmable privacy at Zero Hash. We start with the customer's use case or the customer's problem, and then we've integrated with 37 blockchains, over 100 digital assets, and we work backwards from there to figure out what the best implementation is for them. And we want to do so in a way that like abstracts the complexity. So you mentioned the world is moving towards APIs. I'm not sure if you caught in the product showcase, but our product managers were flashing the MCP, one API, one integration. So that's what we're trying to do. We take all the different ingredients that make what is on-chain great, the yield, the privacy solution, the speed of which chain, the access to and liquidity of a specific market or asset, and then we bundle that into an integration that our institutions can call. And again, it all starts from, hey, this is the use case that we're looking to start with, and then how do we grow from there?
Yeah, Nick, I want to give you the floor again because you had. I appreciate you stepping in, by the way, because I'm like in my head, I'm trying to be like, okay. So yeah, if you guys, it's been a minute. Feel free. I know Fahmi or. I got to tease Fahmi because I recruited him to this panel. I saw him at Paris Blockchain Week, and he was just an absolute savage on the panel. I was like, I'm a fan for life. But Nick, based on
pretty good sweater too. Like,
yeah,
sweater jacket, I like that.
But Nick, based on kind of what Damien was talking about, I mean, you're in institutional growth. You're talking to people all day, every day. What are those big challenges that you're hearing from people you're talking to that you're trying to solve? And are there any trends or interesting sort of insights that you can share with the group? People here might have common things they're thinking about.
Well, I think the good news for kind of everyone here in the room is that what used to be headwinds are now tailwinds. I think it's unquestionably clear that everything is moving on chain. We can debate the timeline for various use cases, but I think this current administration here in the United States has really kind of waved the green flag, and the cars are racing down the track. And so, depending on the type of institution, whether it's a CSD or an electronic exchange or a GSIB or an asset manager or anything in between, I think each one of them is trying to figure out like what their lane is and kind of where they see both kind of the threat and the opportunity of this on-chain future. And they're taking and building a wedge and expanding from there. I think John had a good comment that was, as we saw certainly in the prior administration where there was a narrower path to building on chain. These things started with smaller pilots. Now I think you're seeing folks push in with larger, more ambitious use cases from the get-go, and I think that benefits all of us. And the industry is still small enough where you can get a lot of the great minds in a single room. I'm very excited for the day, and I think it's not too far in the future where there'll be tens of thousands of senior executives with blockchain-focused roles and responsibilities around the world, and each doing really ambitious things on chain.
One thing I might just add to that, though, so we also spend a lot of our time on the institutional side, and when we're engaging with financial institutions, typically the first asset we're talking about, it may be something like relatively safe, which has examples in the market. So Franklin Templeton's Benji asset, I think, in BlackRock's Spittle, those are two really good examples, but tokenized money market fund, able to do certain things, they're able to scale, they're seeing that and saying, okay, I can go ahead and do that. And there are tokenization engines pretty widely available for institutions to go tokenize that first thing. But I think the important thing is all of the stuff behind it. And so what we tend to see right now is we've got the digital assets teams. They're starting to have relationships at the C level. They have to be able to ensure that they're solving all of the questions from the compliance and regulatory teams, and then showing the business case value that happens. And so there's a multi-step process. Once that happens, though, the wealth of opportunities to bring on-chain is quite large. And so I think that is the piece that we are really keenly focused on, which is like, what does success look like in the moment? Distribution is one thing, but like, at what scale do we need to showcase that distribution? And then where is that distribution happening? And then ultimately, for the existing distribution for assets that are not tokenized, like, are all of those investors willing to make the plunge into a digital asset? And what needs to be true? Does the DeFi element need to be true where you're having yield enhancement? Does there need to be that cost structure? Where is that kind of optimized area? And that's where I think we're starting to see like a lot of the focus area and where we're going to see all of the volume.
Saw some heads nodding. I'll let you guys duke it out.
So I agree with all of those things in terms of tokenization. So what does tokenization really mean? You hear the phrase, it's democratization. Well, to most people in the Western world or democratized world, you can access products like Robinhood, eToro. You can go and trade equities. You can go and trade fixed income. Then people talk about fractionalization. So there's value in that. How do you get access to a hedge fund that's beyond your minimum reach? Because the minimum requirement is $1 million, $500,000. The real value we think at Midnight is collateralization. So we've announced a partnership with Monument Bank, a regulated UK bank approved by the Bank of England, the PRA. We think of ourselves as a permissionless network. So they're going to create a private domain within the network where they will tokenize initially $300 million of their clients' cash deposits. That's phase one. Phase two is then to introduce tokenized assets. Money market funds are okay, but they're not particularly exciting. And the cost and spreads of trading them on a blockchain are much more expensive than doing it through traditional routes. It's about bringing access to private hedge funds, private equity funds, private credit funds for this mass affluent client that the Monument Bank service. And the third phase is a real unlock. It's Lombard lending. It's putting all your collateral in a single private vault so you can actually get better lend borrow against it. And it starts with tokenized assets, but eventually it could mean your house being tokenized on chain. With Midnight, that's, I think, a world first in terms of a regulated bank in one of the largest economies in the world, tokenizing the cash assets as full approval. But we're going to get to a stage where we'll have a private vault in Midnight that can control assets across all chains. So a single collateralless solutions, because the inefficiencies in crypto, as a traditional investor from my hedge fund days, I wouldn't touch it. Your margin inefficiency, your collateral inefficiency, the exposure risk you have from people seeing what you do, wouldn't touch it. Midnight, we're going to bring that all together, single private vault, one key controls all your assets. Then we're working with custodians about how you bring selected disclosures, KYB these assets, KYB the counterpart, so you create a compliant private ecosystem within the network.
I think a couple of thoughts. The fact that this industry woke up to the need for privacy about 6 or 8 months ago as a narrative was shocking, right? Like, you guys have been working on it for a long time, but it became like a narrative, right? And this industry, I think, for the longest time, has just recycled or moved on from narrative to narrative every 6 to 9 months. That's not really building an industry. But I think Nick was saying this, right? Like, we used to work with people, and it would take 6, 9, 12 months to get a POC off the ground, right? It would go through a million things. And now those people, so it was like, crawl, walk, run, right? POC, and then maybe something in production, then maybe do something. Now people are going, let's go from just being on-chain to having our own chain, right? They're leapfrogging. The people that were behind are like, we need to catch up. The people who started are like, how do we beat those guys? So there is this kind of gold rush to do this in the right way. So that's all pretty exciting. And I think more than anything, this industry and what we're starting to see now is that case studies outweigh headlines. Everything has always been a headline and a narrative and a story, whereas real case studies matter, right? Like, we power the loyalty and rewards programs for the Detroit Pistons, the Cleveland Cavaliers, and LSU for the whole university. So they are seeing 25% extra monetization of their fans. They're seeing 32% extra fan engagement by tying loyalty points, tokens, but they're called points because once you say token, people's heads start to move. And these are tied to cards, debit spending cards that use stable coins. So you're just bringing better rails and better use cases to people. And these case studies matter. Blockchains should help you either save money through operational efficiencies or make money through new monetization strategies or new products. And I think for the longest time, people chased headlines. So it's great to see. And when you're hearing Damien, he speaks about zerohash's need for and their work with customers and serving the customer. Like, for the longest time, we didn't serve customers. We were in search of users. So the fact that we've also woken up as an industry to distribution is kind of hilarious as well. But distribution is going to come when you provide real use cases to those people that have the distribution.
I'm glad you brought up the speed to market, because when Fahmi was talking, I was going to ask that phase one you described, from the first initial conversation about something like that to it actually becoming a real thing. What, in that example, would that look like? You mentioned how many, 6 months in the example you cited with the...
It could have been, some things have taken us 18 months, which would be like probably 3 months now.
Okay.
Right? Like, and the 3 months, 3 month people are like 2 weeks. Like everyone's on a different scale, but yeah.
Okay.
The speed to the conversation with Monument surprised even us. I was on a panel in late October in London. They approached me, and by March we were signed.
After a panel.
And they were...
Thank your marketing team. That's ROI right there.
And they have been searching for the right solution for about 3 years.
Yeah.
So I'll be available in the corner over here.
Yeah. Nick's just going to post up and wait.
So we are hopeful by the end of Q3 that the first phase will be delivered.
Yeah.
And by the end of the year, we're getting into the second phase and then the third phase. So, yeah.
I want to get to Damien, because you talked to a lot of different companies with a lot of different philosophies and technical capabilities about bringing these things to life. What would you say some of the commonalities around the organizations that are best positioned to move fast and move fast, compliantly and confidently? What do those organizations have in common in your experience?
Yeah, absolutely. I think on the institutional side, I think there's buy-in, there's confidence from leadership, or like a real mandate to move very quickly. We've had conversations with people who are still, not too convinced about what the use case is on chain, versus we have C-suite support, like, let's go do this, when can we integrate? And I think that's very, very important. But I think at the same time, these are teams. I spent early in my career at JP Morgan building the ETF business, and that was a team that was had to share services, had to share resources and budget, and they had to fight tooth and nail every single step of the way to actually scale it to the $250 billion business that it is today. So these individuals are working on borrowed time. And what does that mean? They can't go procure 5 different pieces of a solution. Who's my on-chain vault? Who's my curator? Who's my chain? Who's my wallet? That's where zerohash really comes in, as like a very, very good partner. We have our qualified custodian with our North Carolina Trust. We've got 50 money transmitter licenses, similar licensing in the EU. We've got a Bermuda entity, and we've got the APIs to integrate with all the partners up here. So now, when you're procuring a solution, when you have that buy-in, you can move quickly when you're integrating with us. So it's the internal conversations, but it's those external partners who bring the tech, who bring the simplicity, and I think that's what we're trying to do here.
All right, we got time for some rapid fire. Make sure everyone gets in time. You guys know me. I love a rapid fire. So we're gonna do rapid fire and a final question for everyone, but we got to keep it short because we got 3 minutes and people are, I assume, hungry or thirsty or whatever they are. Okay, so I'm gonna start with Raja. It's been a minute since we heard from you, given it's a big panel. So quick take. So kick us off. What's one thing you think the blockchain industry spends too much time arguing about?
I'm going to take 2 minutes and 39 seconds to answer this.
Get him off the stage. We're done.
I think we've spent a lot of time arguing about like where we are best in individual places, and I think the conversation here is pretty refreshing in that we're talking about, at least from my view, like how do we offset the existing financial infrastructure issues, and I think that's really the focus, which is what are we trying to solve, and then be really excellent at that specific thing.
All right, Nick, over to you. What are we arguing too much about?
I think we argue a lot about like distributed versus represented assets. This is something, in the RWA league tables we see a lot. I think the important thing is like, are these assets being brought on chain for a net new utility? Like, is there some purpose of using a blockchain versus any other software database? And I think that's where the focus should be.
All right, Fahmi, we're going to stay right in order.
We talk about ourselves too much. Good technology is invisible.
It's very meta right now.
No, nobody talks about their cloud. Then nobody goes, I use AWS, and AWS come and go, we support all these. Nobody talks about that technology. When you call your Uber app, you don't think about every piece of technology behind the Uber app, the API to the credit card, to the GPS and all that. You just want, as a user, to know that taxi comes along and rises in time and delivers you time. Somewhere in the future, aliens will look at us and go, look at those strange human beings, look at the phone and tracking what the car does. Because that's what we do, right? So we should start talking about ourselves. We should become invertible tech, supporting the advancement of tokenization, finance, and other sectors beyond.
Love it.
I agree with Fahmi. I think, on that front, like, it doesn't say Netflix powered by AWS, but then if you have a token, how are you going to talk about yourself? So you kind of have to do that. I think tokens will probably start to go away at some level or another. But what I think we talk about the most is the tech. At the end of the day, this faster, this much quicker, this nobody cares. If there's an abundance of block space and not enough people are using it, we're just fighting along the margin. So I think there needs to be a mass extinction event for a lot of chains.
Damien, I'm gonna follow the mass extinction.
Not these guys,
comment.
not us, but there's like 890 different versions of Ethereum. Like, you could launch 890 different versions for your own company tomorrow and make them obsolete. So, like, for what reason, except for launching a token, did any of these guys exist? So they need to go.
All right, Damien.
Yeah, and I think decentralization has been a word that's been like bastardized. Even DeFi.
SEC's walking in here.
No, but I think what good technologies do is expand access to different participants. You had social media do that. You had Amazon aggregate buyers and sellers. And those are centralized actors creating a really good user experience for their customers. And I think you have institutions up here, whether they are branded like that, doing the same thing for this technology. So just reframing what decentralization is and what it can actually do for expanded market access across the globe.
Can I just add to that? Sorry. We're financial people, right? Most of the people in this, in the New York Stock Exchange, there's no DeFi, CeFi, TradFi. There's just finance. If you manage financial rails, if you manage treasury, whether it's fixed income, equities, FX, this is just another rail.
All right, you heard it here first. Thank you so much to John, Fahmi, Nick, Raja, and Damien. Excellent panel. Let's clap for them. And then we are gonna take one more small break and then the much anticipated regulatory panel. Thank you, everyone.